presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you. Right now, we get the Russell off by 21 points, 21.20 right there. And let's jump around to yield to get the 10-year right now. Trading up 12 ticks, so you have lower yield coming at you, which is remarkable when you look at the context of what we have going on with the dollar right now. Thank you for the feedback there. Because you got to run the dollar. Trading at 98.81 right now on the DXY, and we got some dollar strength. You take a look at that dollar strength on a daily. We've made a double bottom right at the April lows. You're talking about 2 full months. You come back down there, you test that area, and we're getting a bounce. You jump over to that crude contract right now, getting a bounce. Speaking of it, look at this moving crude. Look at these bars you got in crude, man. You come back down, you test the 70 area, and boom, we're taking off again. 73.58 in the crude market. You jump over to the volatility index for the volatility priced into this market right now, and you get the VIX trading at 21.33 right now. You jump around to some of the movers today. Amazon down about 0.5% right now. You jump over to Microsoft. Similar, in the red by about 0.4. Yeah, there's a lot of recoil in terms of, a risk-off environment right now. And you jump around to the headlines, as I mentioned at the top of it. Stocks hit session lows as Mideast tension ratchets up. Okay? Concerns and escalation. And yeah, you better believe it, man. Trump's leaving the G7. Okay? You have him meeting his national security team, leaving the G7, and yeah, the fear is there that you're going to get dragged into that. Tensions are going to escalate, and more bombs are going to escalate. And keep your eye on the crude part of this, because you see the escalation going on, and that could be one of the biggest components of causing a bit of a pullback right now in this equity market as you have crude prices spiking to 73.64. You jump over to that gold contract with some dollar strength. Gold trading at 34.02 right now. You jump over to the chip stocks. We got Nvidia shares slightly in the red. Now you jump over to Tesla. Tesla shares right now trading down 3.8%. You jump over to Palantir. Yeah, look at some of these darlings. Palantir down by 2.6% right now. And how about this one on Tesla? You talk about private equity, man. So when it's the richest man in the world, you better believe it, man. And don't tell me I lost it. Oh, forgive me. There it is. Okay. XAI, if you want to compete, and this is why, Adobe comes out today, and they're going through their own. And Adobe's a $170 billion company, man. Remarkable. All right. But you're competing with these companies that are just spending the money on capital, the things that they're going to be able to do with AI. Musk's XAI is burning through $1 billion a month. $1 billion a month. Now, here's the best part of this. Tesla was burning through $1 billion a quarter in 2017. $1 billion a quarter. It was already public, so a little bit of a different story. But nonetheless, you talk about a cash bleed. And that was only a couple years before Tesla really caught a bid. Now, you talk about money spent, money coming in. How about $13.3 billion this year? That's going to be their free cash flow in the negative, and they're only going to have revenue of $500 million. Do you know how much OpenAI already has? $12.7 billion in revenue this year is what they already have. Think about what they already have built. $12.7 billion in revenue. XAI is forecasting $5.4 billion in 2027. They got a long way to go. Now, they're looking to raise right now. Doesn't mean they can't catch up, and it's a profitable venture, but it is remarkable. You look at a company that's spending $1 billion a month right now, and they are leaps behind OpenAI, and then you put it to a company like Google, right? Google's charging, what, $250 a month for their service. What's that, $3,000 a year? Whew. You don't need a lot of people paying $3,000 a year for that service with Gemini to hit the types of numbers. It's a big number. And yeah, they are going to raise, okay? They're trying to raise $9.3 billion, this is XAI, in debt and equity right now. But even before the money's in the bank, they plan to spend more than half of it in just the next 3 months. Imagine running a private company and raising $9.3 billion and then telling your investors that you're going to spend more than half of that in 90 days. They're building out server farms. They need computers, they need chips, they need server farms, they need space, they need energy. Yeah. And they're going to burn through $13.3 billion this year. They're going to burn through $8.4 next year. And finally, they're going to go free cash flow. I don't believe that one, though. And listen, this is a private company, okay? But when you look at some of these numbers, right? So they're thinking that they're going to be free cash flow positive in 2027. 2 years. Musk loves 2 years, right? It's coming in a couple years. There's no way that with $5.4 billion in revenue, okay, that they're somehow going to be $2 billion cash flow. That would mean that they're only going to spend $3 billion. There's no way in the year 2027 that a company like that, they probably shouldn't be. It's still going to be a very capital intensive environment. And this goes across the board, okay? And this is why I bring it up. So what does Tesla's XAI, listen to me. What does XAI have to do? Well, they have to buy NVIDIA chips, right? They have to buy the chips. They have to buy the server space. They have to buy them from Dell. They have to buy them from NVIDIA. Dell up by 1.7% today in a negative market day. But they're going to have to do it again every time you get some new chips to stay at the forefront. That's why NVIDIA is trading as almost the most expensive company in the world. And guess what? That's going to be the case with companies like Microsoft, with Amazon, and the likes. All right, folks, stay tuned. We're coming back with our man Basil Chapman after this break, and we got Tim Ward after that. Basil's coming back. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now, trading down about 50 points, trading at 6,039. And right now, folks, we're going to jump over to our man, Basil Chapman. Basil hosts the Tiger Technicians Hour every morning live at 10 a.m. Eastern Time, and you can check out his outstanding opening call newsletter right on the front page of TFNN, folks. Hit that opening call graphic, and you'll see you can subscribe to Basil's newsletter for a month for $149, 6 months for $695, which is a savings of $199 or 22%, or sign up for the year for $11.95. You save $593, 33%. The best part is all of them come with a 30-day money-back guarantee, folks. So if you plan to keep it, think about signing up for those longer-term subscriptions. You still get a 30-day money-back guarantee. Basil Chapman, good afternoon. Oh.
How are you?
Are we there? Do I have you?
Should have me.
I got you, Basil. Forgive me. How are we doing? Good afternoon.
I'm well. How are you doing?
I'm doing great, man. What do we think about this market, Basil? We got some red on the board, but boy, I was going to say some risks out there, but the market has tended to shake it off. But walk us through it. What do you think of this market?
So this is very interesting. Have a look at this. Is the chart on the left. This is a chart of the Dow. In fact, I'm going to just blow it up a little bit so that I shouldn't use that word blow up. Anyway, I'm expanding a little bit. So there's a pattern that I talk about. I've had webinars on this. There's a pattern that I call the large rectangle, and then there's the narrow rectangle. The large rectangle very often has a price that goes to a peak, the fourth highest peak, peak D or E or F, and then it has a sharp pullback. And then the rule of thumb that I have is that there could be a rally, and it could be a stair-step rally that could go to higher highs and higher lows. It could even go to a peak D, that's the fourth highest peak, just under, right on, or just above the previous high in this rectangle formation. And then if it comes back and it takes out a halfway marker of the rectangle formation, you've got to be careful, because there's a good chance that it's going to go quite a bit lower. Well, let's go through this. We made this peak at 42,842, right here around about the 19th of May. Pull back in a single leg down, and then we climbed up, and we've been walking this green 9-period moving average, which is above the 14, and that's usually very bullish. And what did we do? We went to peak A, peak B, peak C, and we went to 43,115 on the 11th of June. And we've started, that's a peak D, just above the previous high, and now we've started coming down.
Basil, could I ask you, would you mind refreshing your chart? I had it at one point, but for some reason I can't get it up, and I think it may have an issue. I'm hoping maybe if you just bring down your chart and maybe try refreshing it. I hate to stop you, but that way I know somebody else couldn't pull it up.
That's a good question. Refresh, huh?
I'm sorry if it's too much jumping through.
So you can't see the chart.
Yeah.
I'm looking at Tiger TV. I know exactly what you're talking about. So give me a second. So here we go. I'll do this one more time. It shouldn't be a problem. I'm going to go to right here. Going to go to screen. Go to, here we go. There we go. There. And
we're going to try and get it for you, folks. There we go.
Okay. I don't know. Let's see. Share your screen. Share your screen. I hope
I'm not sure.
Oh, that is a pity.
Sorry, Basil.
I can see it, and I don't know why you don't see it.
Yeah, it may be just an issue with the connection or with Discord, because I know what you're saying. I can see a thumbnail for your graphic, Basil, and unfortunately nobody can see it right now. I can't see it, and Al can't see it, unfortunately. I apologize.
Okay, so stop streaming 1 second.
Oh, there we go. He stopped it. All right, we're trying, folks. He's going to reset it. So I see you just took it down finally, Basil.
Okay, here we go. I hope this works. click, click. Just little buttons you press. Can you see it? Can you see my chart?
Let's give it a shot. We got you. There we go. Thanks for hanging with us, folks.
So
all right, Basil, go for it. We're looking at the Dow. Go for it, please.
On the left, I'll do this quickly. On the left is the Dow daily. In the middle is the weekly. And on the right is the monthly. I'll go backwards. The monthly has the 9-period moving average way above the 14, and that's really positive. The weekly chart has the little green line for the last 2 weeks, and that is a positive. And the daily chart has gone, there's the rectangle formation from the 42,842 high in the Dow, comes down, runs up, and it goes to peak A, peak B, peak C, and we just made the peak D, what did I say, on the 6th of June, at 43,115. And we were very fortunate, the Thursday, the day of the news, the evening was the bad news, we had already, fortunately, had gone short, 3 times short the Dow. This is the SDOW. We are still long the Dow from way, way lower. I wanted to keep this as a short position, a shorter term, and I've got the longer term position. And we'll make changes if we need to. But right now, it's been very positive with the short position. And there's a pattern that I call the dreaded H. And it's if we close underneath the low that was made 3 days ago, 42,081, that's going to be that dreaded H pattern. It says you can go all the way down to the 41,760 level, which is the 200-period moving average. This applies, this exact same thinking applies to the S&P, which is turning. If you look at the charts, this is nothing. Look, the 9 is still way over the 14 in the S&P. That's still, I haven't even got a sell signal in the S&P. The QQQ, same thing. Look at that. There's the daily chart. Still extremely strong. So it's with all this news, what's fascinating about this particular phase, with all the bad news, we still really haven't got any big turn down sustained. There's been buying pressure that keeps coming in. When that fails, that's going to be a big deal. And for me, 41,700 is the shorter term 200-period moving average support that really has to hold. The S&P has the same equivalency. In that case, I'd call it the 5,900. We're at 5,988. Take 5,900 out, and that'll start a longer, more protected down move. So within the context, it's interesting. You were talking about Microsoft. We've been long Microsoft from 338 for a long time, taken quite a lot off. And here it is, just making an all-time high yesterday. Today it's pulling back. You could barely see a downturn. And what's interesting is that the WT, which is the world, this is fascinating. It's the VT, the Vanguard Total World Stock ETF. This has the United States, American stocks hold about 49%. Look, within a couple of points of an all-time high. That's the world stock with all the bad news that you've got. I think the bad news is going to impact the market, but so far it's more like a slow rollover, and at some point it'll accumulate. So I've been considering for at least a couple of weeks now that we're in a digestive phase. That digestive phase should include our stock market coming down, but I don't yet see anything like a crash. It could happen, anything can happen, but it's more just a slow rollover, and at some point the buyers are going to say, uh-oh, and they won't be there, and then you'll start getting the selling. We haven't quite gotten to that phase, and as I say, these are the levels that I'd be looking at. Now, what's also interesting is I've used Robinhood as a really good proxy, because that's where the general market, a lot of people are in Robinhood, and it's been kind of a very interesting phenomenon. It had an 85 round number high back in August of 2021, slumped down to the 6s, and then it turned around. We still have a position from the 16s. It's in this at 74, and I can use this as a clue. It's also the rectangle formation. If Robinhood starts to close on a daily basis for 2 out of 3 sessions, close 68.56 was the low on the 9th of June. If it closes under 60, I would put it at 67. If it closes under 67, I think you're going to see the general market start to move much lower. And we've still long our gold position, and gold is still holding in because it's kind of a proxy for geopolitical activity.
It sure is. Basil, some great trades. I appreciate the information. We look forward to the Tiger Technicians Hour tomorrow. Have a great night, man.
Thank you very much, Tommy.
Thank you. Folks, check out Tiger Technicians. Check out Basil on the front page of TFNN. We'll be right back.
Oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Forgive me, folks. That one was mine. I'm hitting buttons all over the place. All right, we're back. We got the S&Ps right now negative by 47. We got the NASDAQ 100 off by 190. Always a great conversation with Basil. Check out Basil's opening call on the front page of TFNN.com. And yeah, let's jump around to what else we have going on. So Tesla. And how about those numbers when I was coming in talking to Basil, right? As we were coming into that segment, talking about XAI spending $1 billion a month on the number. But Tesla, okay, in 2017 was burning through $1 billion a quarter. Now, in 2017 money, okay, yeah, it's not quite, but it is quite a number when you look at from 2017, you had a period of about a 3-year ramp from that type of cash burn, right? To where Tesla really accelerated. Now, you had COVID in there on top of everything accelerated, okay, and you made it back. But yeah, you were in the doldrums for a while when you were pushing down here. Let alone where you were in 2013. And then, yeah, you look at that type of deals. We were talking about this morning that Microsoft and OpenXI are battling. And they're battling in a big way. And executives at OpenAI are considering filing a claim that Microsoft is being anti-competitive and bringing in lawyers and judges and all of that. And yeah, they're fighting over potentially trillions of dollars. So you better believe the race is on. But you talk about a cash burn, man. And then Amazon comes out today, and Jazzy says that AI is going to allow them to reduce their workforce. And you better believe it is, man. I think I may have even had that one up. I'll have to find that one of the next one. Here it is. There it is, yeah. AI will shrink Amazon's workforce in the coming years. Right? So much for hiring, so much for jobs. Jazzy wrote that employees should learn how to use AI tools and experiment to figure out how to get more done with scrappier teams. They want the scrappy guys. The scrappier teams. Quite a verbiage when you're talking about basically figuring out how to do more with less and lay off people, right? And yeah, they've made big, and they've been doing this for a while, all right? But as in, they bought warehouse robots years ago. But you better believe it's coming, man. So Amazon has laid off 27,000 employees since 2022. And then beyond that. But you're talking about 1.56 million full-time and part-time employees in its global workforce. And something you want to try and remember when you go through this, right, is that think how fast some things move and think how hard it is to comprehend where we are, right? In terms of think about when the smartphone came about, and how ingrained phones have been in our lifestyle for 10 to 15 years. Well, folks, phones didn't come out until you're talking about, really when they started to ramp up with the iPhone. What was it, 2004, 5, 6, something like that? You're only talking about 20 years in the iPhone. Meanwhile, they've been that way for 10 to 15. Things revolutionized, and you're going to see it happen with AI. The way it's going to the productivity in these companies is going to go through the roof. All right, folks, with that in mind, let's talk to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 30 past the hour, and we're going to talk a little markets. You can always reach Tim at his website, which is ord-oracle.com. And don't forget, folks, under the services tab, he's got a couple of great webinars. The 6 secret ratios every trader should know. We talk about some of these throughout some of the interviews. And the secret science of market tops, both of those under the services tab right at TFNN. Tim Ord, good afternoon.
Good afternoon. Sorry for the delay here.
That's okay. We're working through a few technical difficulties, myself included. I appreciate you coming on with us, man, and sharing the information as always. And quite a market. We got a little red in the markets, Tim. Let's get into it. What do you think?
Okay, first chart's the daily chart. This is the SPY. Do I have the charts, or do you got them? Or am I?
I don't know if my producer's in there yet. So let's go with, I'm looking at him right now, I believe.
All right.
Oh,
so
nope,
anyhow.
I see him in there. He's got you, Tim. Go for it. He's got you. Go for it, man, because I know you like to annotate them at the same time, so go for it.
All right. So anyhow, if you notice, this is the SPY chart, it's a daily, and more or less we're kind of going sideways. Been going sideways for, 6-7 days here. So about a week and a half, give or take. And if you notice, the bottom window is the VIX. And then if the VIX is going up, and where the SPY is not really going up, it's going sideways. But the VIX is going up as the market's going sideways. That's usually a bearish sign. That's what tops are made of. Because when the VIX goes up, that shows more fears. Actually, it's an option-related indicator. So the smart money is starting to buy puts here. And the smart money is always right. So I guess this is a bearish sign. A close below this line right here, this red line, which is, 595, give or take, is basically the previous highs. If you go up, and we broke above those previous highs, if you close below them, that's usually adds to the bearish sign. I'm not sure that's going to happen today or not. I mean, we're kind of setting on it. We're off about 0.7 right now. But I think we're going to make an attempt to bounce here. This week is a short week. Thursday, the markets are closed because of Juneteenth. It's a holiday. It's middle of the week. It's kind of a stupid holiday. But anyhow, so the last 2 trading days are basically tomorrow and Friday. And I think that's where I'm going to get a signal. I'm going to get a signal today, probably not, the way the market's kind of just hanging down here. So I'm hoping for a bounce back up to the previous highs. We go to chart 2. What I'm looking for is this high right here, this is the weekly chart. So this is last week's high. That high came in at 605.06. And a lot of times, you test a previous high. If you test it on lighter volume, that's really a bearish signal on the weekly chart. So I'm thinking we're going to go back up and test last week's high. And again, we're either going to do it tomorrow or Thursday. We're not probably going to do it today. And there's some volume studies suggest that high could be tested because usually the market peaks on lighter volume. So anyhow, I'm looking for this high to be tested, last week's high. And I think from there, we're going to go back down and basically go back to around that 570 area. I do think that 570 is going to hold, but on a short-term basis here, where I think we're making a high. So I hear the music.
Let's take a break. We'll come back. Tim's got a few more charts, folks, looking for testing those highs. And right now we got markets just off those highs. Not that far, though, even on today's action. S&P's off by 44, and we're coming back with Tim. Stay tuned, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps in the red today. Markets pulling back a bit. We're talking to our man Tim Ord. Remember, folks, you can reach Tim at ord-oracle.com. And don't forget about those outstanding webinars under the services tab right at TFNN. You can order those anytime. They're right on your members page. Watch them as many times as you'd like. So let's get back into those charts, Tim.
Oh, this line right here is really important. So the market popped above that line, and actually there's some volume studies, but it went above a previous high. Now, when you break a previous high, you should break a previous high with sign of strength. Sign of strength is at least equal volume, if not higher, and you really had to have a big trading range through the previous highs. And you did have a big trading range, but volume actually decreased by 8%. That suggests a false break to the upside. So if you close below this line right here, which is close to 600, I think it's 595, then if you can't hold the previous highs, they'll attempt to take out the previous lows. Well, the previous lows is basically this line right here, which is basically 570. I think that's where we're going to head. And so, will the market hold above this high going into Friday? Maybe. Depends how it tests the last week's high. If it tests that last week's high on a lot of volume, most likely I'll be short this week. So we'll see how that works out. But I'm thinking the whole thing is basically the pattern forming here is a left shoulder. Oops, back to that chart. Is a left shoulder, and then this left shoulder, here's the left shoulder here, and the right shoulder is forming now. And so I think this trading range type thing may go on until about August time frame, give or take a week or so. But anyhow, just nothing significant to the downside. In other words, this is not a major decline of any consequence, but it's about a 5-6% move as far as playing. So I'm kind of looking for that setup. So anyhow, that's the S&Ps. We don't have a lot of time. Let's go to the gold market. This is the XAU. Goes back to 1988. It's a monthly chart. And all it is just the RSI. Anytime the RSI gets above 70, which I marked in these red lines, red dotted lines, for vertical lines.
Yep. And
every time it got above there, so this chart again goes back a bunch of years, and right now we're at 71.89. So all I'm saying is the market's just due for consolidation, and I think we're probably in a time frame that may mirror this thing that we're going up like in 2000, because I think even though we may have a consolidation here that may last a couple of months or longer, the bigger trend is up, and I think this is kind of a repeat of the 2000-2012 time frame, or 2000-2011 time frame. But anyhow, this shows, if you notice, that worked out really well, just the RSI on the monthly time frame hitting over 70, and all of them picked tops. There's not one failure here. You know, this one kind of went sideways, but all of them are highs. So we got the same thing right here. So this is not the time to be extremely bullish on gold stocks. Now, these are the bigger gold stocks. I think the small ones are do fine because they are just starting to come off the bottoms. But the big ones, the Newmont Minings, the AEMs, and all those big ones are probably going to consolidate more of a sideways move, not a top of any consequence. So this is important to remember that we're just due for a consolidation and nothing significant, but everybody's kind of bullish here. I got a lot of emails in my, what gold stocks to buy right now. And you can take your time, but I concentrate on the smaller ones compared to the bigger ones right now, because I think the bigger ones are not going to move up much. This is another chart. This is GDX with its monthly. This is a monthly GDX, and also I did the RSI. I didn't go back as far as GDX doesn't go back, to 1980s like XAU did. But same thing here happening. I think all we're doing here, we had a high in April, which is where I got out, and I think this is just a retest. If you notice, we're kind of making a retest of the April high right now, and you got the RSI up on the GDX at almost 74. So it's due for a rest too. So I'm thinking GDX is going to pull back down to that 40 range, 39, give or take. And I think that may happen over the next several weeks, if not longer. So not real big bearish here, but it's just a consolidation and nothing. It needs to get at bottoms. You need fear in the market to drive the market higher, and you need on tops you get optimism. And so if the market goes up too fast for too long, you get an RSI up around 70 on the monthly time frame. That's never a good idea to step into the market, because chances are you're going to get consolidation. So that's what I'm kind of looking for. On a short-term basis here, I think probably the top on GDX is in. Again, I got out the mid-April high around 50. It could have probably done a little bit better because it hit about 53. We hit 54 on the recent rally up here. But at what point, I'm a big fan of volume studies. And anyhow, on a short-term basis here, last week's high tested the previous week's high. If you notice here, on about 20% lighter volume. Volume just really dropped out on last week's rally. Right. And you just couldn't get through that high. You need, again, to break a previous high, you need at least equal volume, if not higher, to break through the previous high. And the weaker percentage, the greater percentage, less of the volume of the previous high, the more weak, or actually the more stronger that top becomes. So you got a 20% decrease in volume, so that's a pretty weak rally of last week. And I don't think we're going to need to test last week's high, so I'm thinking we already basically started the downtrend. I think the downtrend started. So if market, again, if you close below the previous high, which is this little line right here, which looks like about around 53, we're close to it. We haven't closed below it. If you can't hold the previous highs, they'll try to take out the previous lows. Well, the previous lows on this instance is around 45. I don't think that's going to hold. I think we're actually going to get down to the next previous low, which is basically around 39. So I think that's where we're going. But first target is 45. The next target is down to 40. So it's going to take some time to get down there. September maybe, I think it could be there. Maybe October, I don't know. But that's why I'm thinking the top is in, because the weeklies are kind of turning bearish here, unless we get for some reason, we get a lot of strength this week, which I doubt, because it's only a 4-day week, and we break above the previous high of last week. I don't think that's going to happen, so I think the top is in. So
nice.
Just be patient.
I appreciate. It's remarkable. I was jumping through the charts, and that was some great information, man, as always. And, 40 seems like a far away from 53. But what's remarkable is 40 only brings you back to the middle of October. And, yeah, it's already June. But in terms of the run that we had, and then you pull back to 35, of course. But we were trading at $39 in October of 2024, and that was up from $25 in February. And it's been a heck of a run. It has, for sure.
Yeah.
Tim, I appreciate the information, as always, man. We look forward to talking to you. And, so markets closed on Thursday. We'll talk to you next week. We'll talk to you a week from today, man.
All right. Thanks a lot.
Take care. Folks, stay tuned. I'm coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Pretty remarkable where we have prices trading right now. When you jump over, you talk about the headlines. And Wall Street Journal, Trump considering options including possible U.S. strike against Iran. U.S. knows location of the supreme leader. Boy, that ever happens, folks, watch out. Because there's no higher tension if that ever happens. And, you know, the president left a G7 summit in Canada earlier saying he wasn't doing so to work on a ceasefire, but something much bigger than that. An end, a real end, not a ceasefire. All options on the table. It seems to be what it looks like. All right, let's talk a little bit of poker. Let's talk a little bit of cash. You talk about it, man. So I've given you some updates on a $50,000 poker tournament. I gave you some updates on a $100,000 poker tournament. How about a $250,000 poker tournament? I don't think they have $1 million. They have $1 million. They may have $1 million going on this year. They run $1 million poker tournaments. $250,000 is the price to enter this poker tournament, folks. They're down to the final 8, I believe, and they had in here 63 people showed up. There's 8 left. The first place, jumping around, how about $4.7 million? Okay, and you're talking about a prize pool among 63 people show up, $15.5 million in the middle. Now, here's what happens in some of these tournaments, okay, is that people are sharing action, and this is not illegal. But to give you a glimpse of this, let's say you have 63 players, okay? You're the best players in the world. You all but, I think, 5 of the 8 that are left have won World Series of Poker bracelets. Daniel Negreanu finished 9th for $531,000. Okay, they're all notable names. But what they do is they share action to lower the variance. This is a mathematical game, okay? This is a very high variance event, putting $250,000 in a poker tournament against the best players in the world. So what they do is they say, you know what? There's 10 of us. We'll all put in $25,000. We'll all get 10% of our action. And that way, we have 10 horses in the race. We're the best players in there. And over time, we'll have less variance. And somebody's going to end up at the final table, nonetheless. A little poker to end things. Folks, thanks so much. Have a great night. Have a safe night. I'll see you back here at 9 a.m. tomorrow morning for the Morning Market Kickoff. Have a great one, folks.
Building wealth trading